It was so great. I mean, the first time I've always myself been in an only women's panel, especially lawyers who are so deeply engaged in understanding the narrative behind FinTechnology. I think the key take-home points here were, number one, if we want to start thinking about understanding FinTechnology and taxing FinTechnology, we need to understand what it is in the first place. So what is financial technology? Once we understand that, the second question is, what is data? And how do we tax that data? So until we understand FinTechnology, until we understand data, we will not be able to talk about tax. And once we do start talking about tax, then we have to ask ourselves, who are we going to tax? Because one of the panelists was all about, look, it's the poor who are able to access finance as a result of these digital platforms. Now, if you're going to tax them for using applications to borrow money, to pay money, you're actually inhibiting them from economic empowerment. So as we think about FinTechnology, think about who do we tax, the consumer, the user, or the producer. Another very, very sexy, if I may use, example that was given to us was the Brazilian experience about the issue of the miners, those people who are mining the bitcoins, right? Should they be liable to pay tax? And the interesting analysis that was given to us is that that process of mining is not a service that the miner is delivering to a client. Because you have one person in Kenya who's sending a digital payment through cryptocurrencies to another person in America. So before that transaction or that cryptocurrency moves from Kenya to America, there is a miner who has to validate that transaction. But it's not the miner who's validating the transaction, it's the system, right? And once the system validates the transaction, the system generates a Bitcoin in the name of the miner. So he has gotten a reward for practically doing nothing. So should we tax that? And if we're to tax it, how do we tax it? Do we tax it as income earned? Or do we tax it as an asset? So we don't apply income tax, but we apply capital gains tax. See how interesting this area is? I know, and very complex as well, because like we said, we have to understand it. So the lady from Nigeria, Ms. Nora, she argued to say, well, we can use both approaches to taxing such Bitcoin, such cryptocurrencies. Apply the mining income tax like the Swiss have done, because the Swiss look at it as your personal income that you have earned, and they apply the income tax, right? But you can also look at it as an asset and charge capital gains tax. And the most important thing about cryptocurrencies is the independence between the financial institution and the revenue authority. The revenue authority does not have to wait for regulation to be in place before they can tax. So if we're going to be thinking about domestic resource mobilization, I think the KRA needs to really focus on cryptocurrencies and just tax it, and let's have more money, and let's have development and infrastructure financing. Thank you.